Namaste and welcome to Concepts with Karan. I'm very excited with today's episode because I have a very special guest. I have with me Gopkumar, the CEO and Managing Director of Axis Mutual Fund, who's had 3 decades of experience in financial services, and prior to that he was with Axis Securities and with Kotak Securities. Gop, welcome to Concepts with Karan. I'm really happy that you made time for this episode. So much to talk to you about.
Thank you for hosting me.
The attempt when I'm kind of speaking to industry CEOs is to kind of just bring out the stories within the firm. So let me just start with the first question. Lots of changes at Axis, great changes at Axis. Would you want to just take us through some of those changes and then we can go from there?
Yeah, I think we'll speak about what is impacting the investors today. Yes. And what are the changes, what we're trying to do. We had an excellent track record for last 10 years. I think out of 14 years, we are 10 years unbeatable track record in terms of the performance. We are the number 4 largest equity fund.
Yes.
We manage overall, along with fixed income, we manage around 2,65,000 crores of assets. We are number 8 in terms of the league, but on the pure equity, we are number 4. During our good times, our performance was extremely good. We became the number 1 yes. in terms of equity fund. And I understand you're also part of us when we did this.
Yes.
The journey continues. I think we had a particular style called growth style, and we continue to focus on growth style for 4 large funds. So there is no change of philosophy in terms of what we approach. The reasoning is very clear that my distributors and my investors are investors based on a particular style, and we have we have a mandate about that, and we have no job to change the style at the moment of time. But very interestingly, when you looked at our portfolio, and Ashish joined as a CIO from Credit Suisse, day 2, we went and asked ourselves that why did our fund didn't do well for last 18 to 24 months. We said whether it's a quality issue or a style is an issue. Because if you look at most of the fact sheet across the fund houses, it may look similar in terms of stocks. But I think the truth remains in the long tail. That means
yes,
typically a fund has 1 or 2% stake in particular companies will not do well. And there may be issue of quality of management and a number of issues around it. But to be very frank, when we looked at the data for last 6-7 years, I think our problem is not quality. Our problem was the style. We continue to hold a good quality stocks in our portfolio. I think that's the style, and we continue to be focused and saying that we will have a quality stocks in our portfolio. Having said that, we have 2-3 issues in terms of portfolio what we are trying to change today. One is that we are a high concentration risk. That means from an investor perspective is that my top 10 holding was almost 65% of the portfolio. We had a commonality among all our stocks, looks like 55-60% stocks
yes,
of
we did, yeah.
All were looking similar, you know the story about. Third was on the cash levels. So what we did was, on the number 1 issue is that today we are much more diversified. Our concentration risk has reduced. If you look at a couple of funds, from 65 it has come to 45. Our threshold is around 38-39%. That's the broad maths what we are trying to do, but we are not trying to put this framework on fund managers saying you need to be that way, but there's enough flexibility for them to perform. That is one thing we have done. We also have large diversified. There are a couple of schemes. We had 45 stocks. We are now 65 stocks. We added new stocks in the portfolio now. We have positioned our portfolio more of B2C companies now. We were always, but there are a couple of additions have happened on the B2C side. That you can see, look at the fact sheets and we can see the difference what we are trying to build on. That is one thing which I have to address. Commonality also been reduced today. Today we are almost 40-45% commonality from the 65.
It's a big drop.
It's a big drop because we added more stocks in our research basket.
How much is that research?
Today we are hovering around 370, 375
that
stocks.
Was a much smaller list.
Much smaller.
I think 140, 150.
Yeah, during the time maybe 140, but I think when I came in, we were at 325, we added 50 more. For that also we need to put more analysts in job. We have more coverage with the analysts we have done. More important is the cash level which was dragging up performance. So if you look at a couple of funds, we had an average of 12.5, 13%. And it's pretty high. For example, if you look at average fund size of us is almost 35,000 crores. And 4,000 to 5,000 crores was on liquid. Today our cash levels are down.
So how much would that average?
We are now at 5% in most of the places.
So that's also halved.
which was much more hard, and that's the right threshold we do believe in the large cap funds. The small cap has 6-7% because there is a liquidity what we need to do. But that framework is in place in terms of risk management, the way we want to manage. It comes from philosophy that customers or distributors advise investors that for equity, we have no job to do an asset allocation. We did our cash call in 2016, and the cash call was extremely favorable to us. But I think this point of time, we don't want to do our cash calls. I think, so if you look at the way we are positioned today, if you look at our portfolio attribution, which we talk about, that, yeah, Gops, you spoke English today so much, but how does it translate into the portfolio attribution? If you look at our price to book, portfolio price to book plus the price earnings plus ROE, and against our index, the benchmark, we are much, much cheaper. That means there's all reasons that we will come back.
Portfolios
quickly.
would do better.
Much, much better.
And again, this used to be a number which used to be closer to the index or higher?
For example, let me tell you, my blue chip 16.2 is the FY24 estimate in terms of ROE. If you look at the index is around 14.5. It's on consensus estimate. So it is better positioned now. So if you look at last 1 month, it's too early to comment, but there is a green shoots. On our large categories, we are have number one in terms of performance now.
I think from what you're saying is that the core philosophy of having to invest in high quality growth stocks continues, but you're kind of adjusting for overlaps between portfolios to be much lower and larger stocks that come into the portfolio so that they can make a difference and lower cash positions. That's how you're...
Yeah, the reasoning is that when we did high concentrated portfolio, you're also part of the team that point of time. I've always said that Axis had a performance which is first quartile plus 6%. Our understanding today is that we want to be consistent. Yes. So if you have to be consistent, then you need to make sure that you are in first quartile. We've been consistent with that philosophy also. It's not that 10 years track record and AMC like us, which are only 14-year-old, and from a pure equity perspective, we are number 4. It's a large achievement. Yes. I think you are part of that success story. So we want to be in first quartile. So if you have high concentration, what happens is that in the good days, you do extremely well and then fall in fourth quartile.
Yes.
Second is that we continue to be growth style, but we also have a thought process, which is saying that how do I have a multi-solution platform as a mutual fund? We don't want to be focused and looked at only a growth style.
As a growth fund.
So we have a value fund which is very small. So we still believe that we'll have different styles which are both growth and value. There are asset management companies across the world have done this quite well. What we're trying to do is that I think our vision is next 3 years is that we want to be in the league table. We want to be a number 4 player. So we need to look at fixed income also. We have now done 1 lakh crore of fixed income now.
Oh, that's a fantastic number.
Yeah, we already have 17,000 crore assets. We started at 82,000 crores.
Oh.
And particular category, we are market leaders now. The journey is on. I think next 12 to 18 months, you can see as AMC giving a multi-solution platform, just not looking at a growth style. Because
Sure.
So that is a transition, okay?
Yeah, I mean, actually, if I now step back and look at how it was and now, the transition's quite large actually. The roles between the research analyst and the funds team, and so who calls the shots?
So we do have now analyst portfolio. So we have an independent analyst portfolio. So the objective is to find out that what we missed and what we didn't miss. Second is that in IC today, earlier management COCI was same. Today I chair the investment committee. So we do pick up 4 stocks, 4 schemes, and even the product team also is empowered to do on product attributions, and product team also carries a similar AUM performances. So product team also works very, very closely with the fund management team, especially looking at a peer group and see where we are and what we are not looking at it. We also look at very clearly from a detractors perspective, and we also have one way to look at is that what is our active weight on the portfolio. I think it's critical. We are running almost 80-85% active weight. I think it's very interesting.
Yeah. And that too on a growth style. So
it is the growth style. You're right. That also because there is a portfolio changes happening, and I think we continue to be at 75-80 range in terms of active portfolios.
Let's just shift focus a bit to fixed income, because you spoke about fixed income as being like the driver on the league table. And have you also made changes on the way fixed income has been managed, or is that been relatively?
See, Devang and Shiva has done an extremely good
Yes,
job.
it's
I
been
think
a good
if you look
combination.
at our track record on fixed income is amazing.
And with no blowouts in a very tough environment.
Nothing. If you look at the blow off happened in 16-17, I don't think we had any side pocketing.
Access was.
I think most of the AMC has gone through the pain. I think we've been very conservative in the sense that our philosophy of fixed income is all about quality again.
And a very long tail of.
Long tail, and we've done extremely well on that. I always said that our rightful market share has to be much better, because the track record what we have, we also have a strong parentage of Axis Bank, we run a large corporate bank, and how do we work with that? I think that is changing. Fund management we have not changed much. Our philosophy continues to be high quality. Couple of categories like overnight, we continue to have 50% market share on overnight funds.
Oh, that's remarkable.
Yeah, we've been number one for long period of times, 5-year track record with.
I'm not sure anyone has had a 50% market share.
No.
And that is unheard of.
Unheard of. Yeah, if you look at the client profile and the large treasurers, right, and the CFOs of the company, they also don't want to take a risk, right? Ultimately, they need to be responsible for their board and their senior management. I think in that sense, they also don't take extremely high risk products.
When you now are doing all of this and there's work taking place, how has been the response from the distribution community and the investors? Would you like to share some of that?
I think my last 6 months, out of that 4 months, I spent only traveling people, meeting people. I think I covered more than 500, 600 distributors. I don't even know how many distributors I met in my life. I wouldn't have met so much. I think what we're talking about is that me and Ashish post 3 months, we said that we need to put out a note across. This is a public document, and we said that
of these changes.
All these changes, what has happened, what is our philosophy.
I've heard very good things about that deck.
Thank you so much. I think we are bold
it's come
enough.
from outside that the deck is pretty good.
Interesting, Karan, is that we are bold enough to put it across. I think because it's well written, well thought process. I think I've been doing this outreach program across. Obviously, we're getting a lot of questions around it, and there is anxiety in terms of when the performance will come in. So my only connect with people is saying is that industry has a 3-year track records. They look at 3-year track records. I still believe that I'm here to challenge the 3-year record, because what advisory should also look at is the product attribution. Look at key ratios of the portfolio versus benchmark. That gives a comfort in terms of how the fund will perform on a longer term basis, which I explained on the price to book, price to earnings, as well as ROE. I think we are well placed.
So we've spoken a lot about mutual funds and the capital market, publicly listed fund structures. What's happening on the alternate side? But that's an area I know fund houses have been really aggressively investing in, and what's your take on that, and especially on the private equity real estate side, etc.?
Yeah, I also come from a similar background, so I love alternate products. I think that platform we are building now. I think quickly we are building on. So we are now running some 5 funds on that. We are almost 4,500 crores. We have interesting products on this platform. One is the RE commercial with Tishman. Tishman is the largest realtor, and we are doing some large projects. It's too early to announce. We just had a term sheet with pretty large commercial property we're developing in Pune and Bangalore. Too early to open and tell you that, but I think the funds are done well. One of the funds which we are last exit on the opportunity, the PE side, has given return of 18.2% IRR. So there are 3 components for us. We have a large deal origination pipeline, which is we have a corporate bank, so we are able to do that.
Yes.
Second is also we have deal origination from Axis Capital.
Right,
for us, I think we come from a credit background, very strong credit background, because our parent company is a bank.
Of course.
And we have a fantastic track record on our fixed income side. We do believe that that's a spot which are a very interesting space, so that risk return is balanced out much better. We are also looking at and saying that we are not doing a deal above 50 crores. So we have 10 to 12 papers, so that the risk mitigation tool we are trying to build in. Largely we discourage last transactions because last transaction gives you 17-18%. So we are looking at some special situations. So we already have 4 deals. We have already done that. So what we're trying to do again is that even though if I had promised 13.5%, my experience in my private banking days is that you'll end up with a gross return of 12% because you are sitting on the cash. So my belief is that we should complete that 1,250 crores in time, and that's one space we are looking at launching some credit funds.
Clearly, you have your plate full across all of the.
On the public markets, very interesting is that today our Hitesh Zaveri runs our PMS today. We are almost 1,250 crores. We are number 1 fund in terms of performance.
And I just want to come to the last section of all of this conversation, which is I found the campaign very interesting. Socha Samjha Risk. It resonates well because Axis had the ethos of responsible investing, so it kind of does well into that. Any thoughts on how it came into existence? And
from a philosophy perspective, if you look at our funds, when we called out saying that we are being a quality conscious, and if you look at our portfolios, we are very quality conscious, whether it's equity or fixed income.
That has been the hallmark.
And if you look at our alternates also, if you look at what are the companies we own, we are very conscious about quality. I think the overarching principle of last 14 years is that we need to be responsible investing. I think riskometer and the risk profile fits in pretty well in that narrative. That's the reason which we think that that's the right thing. I think we'll continue to be educating our investors because we have a large investor base, largely retail, and it's our responsibility because it's a public money business.
Yes.
We have a fiduciary responsibility. So it's more important for us to engage with the people in terms of what are the risks they are taking.
Last thing, Gop, I know you're a sprinter, you represented the state in hurdles and sprinting. Has that helped you while you took this assignment?
I think, looking at a career of 28 years, I did a lot of things. It's like trying out a different sport in life. I did car finance to portfolio management to wealth management. I did mass affluent. I did a broking career, now an asset management career. It's like to find.
You are literally passing the ball.
In that sense, yes. I think it gives energy to work. It gives a lot of perspective. Today morning, I was telling people that I usually run in today morning we're running a 5 kilometers, so we were running in a gang.
Right.
Somebody asked me, do you like to run alone? I say, I like to run alone sometimes. Because it keeps you thinking about what next, because that's the space which you think about.
It's a space to think.
Yeah, I think sports actually helps to shape up your careers because mental resilience is very high for sportsmen. I do believe that. I don't know, Karan, you're talking about this.
Totally agree with you. It's sports make always a sporting CEO is the best CEO.
I don't know. I think for me it is more important that how do we manage the public money. I think it's a great responsibility for us to deliver that, and all other are part of the outcomes of that.
No, I think it's been a fascinating discussion with you, Gop. Thanks for taking time out and being so candid about all the relevant changes taking place in Axis. I wish you all the very best.
Yeah, thank you, Karan, and you're being a good host. And thanks that you're also part of the founding team of Axis AMC.
It has been.
Am I just taking a baton and running?
Oh, no. It's, Axis for me has been like one of those spaces that will never ever go away from my life. It's an integral part of my life because Axis was one of those places which gave us all the opportunity to build our canvas and color.
It allowed you to make sure that you are financially independent.
Yes.
Now you are sprinting around.
That's true. That is also true. So I owe a lot of gratitude to Axis, and like I said, thanks for. And I think the changes that are coming up are very relevant, and that story is looking very powerful. And kudos to the team. Yeah,
we want to be relevant in the industry and relevant to our customers. I think very clearly, if you've been relevant to our customers and our distributor community, all advisors, will be relevant in asset management business.
Actually, you're so right. In fact, one of the metrics that Axis has done remarkably well on is the number of customers, the number of retail investors. It's amongst the highest in the industry.
Yeah, if you
It's like
Karan, thanks for thinking on this. Is that I always thought that every 3 folios in industry, 1 folio belongs to Axis.
it belongs to Axis. It is, and it's come in the shortest possible time because there are track records of 25 years. Organizations have been there for 25 years. It's come in like the shortest possible time.
I think Axis story is quite different compared to across whichever geographies in the world you look like. Is that 14 years to build a retail franchise and building such a large franchise. It's a commendable job. I think I always respect the people who are part of this. You are one of the things because you can't imagine, because you still have people came earlier than us and they're still struggling to get a meaningful AUM. If you look at us, we grew so fast, and thanks to our investors, because investors had a lot of faith. We delivered what the investors had to be, whatever we committed to the investor. I think our journey has now re-looked at, and it's all about building this organization much better. I think that's what.
So on Axis 2.0, best of luck, and
Yeah,
for the next
so much.
14 years.
Next 14, I have got not 14 years more, but.
With organizations, we'll have the 14 year, and for the time that you are out here, go best of luck.
Yeah, thank you so much.
Have a lovely time at Axis.
I'm looking forward for any summer conversation. Thank you so much.
Thank you.
Thank you.